Hi, and welcome to Let's Talk Forex with Alison and Chris. This week we're talking about the difference between Forex trading and stock CFD trading. I think this is particularly good for a lot of beginners who are not sure which way to go or not sure of the differences between the two. So please enjoy it. And if you've got any questions, send them through to podcast@fxscouts.com. Thank you.
Hey Chris, how's it going?
Yeah, pretty good, Alison. How are you?
I'm doing very well, thank you. So today we thought we'd actually just jump straight into our topic. And as we said last week, we are going to discuss an interesting one. It's about whether you should trade Forex or stock CFDs. And it's a question we get quite a lot from many traders. So we thought we'd cover the topic. I think our listeners are really going to enjoy it.
Yeah, I think so. As I think a lot of traders know, both Forex and stocks can be traded on the same platforms, the same brokers, and you can use very similar strategies when trading them. But there are some really important differences that you got to be aware of when you're choosing between which one to trade.
Yeah, for those who may be unfamiliar with these assets, Forex stands for foreign exchange, and it's basically the exchange rates of two different currencies. And, as we know, the Forex market is the largest market in the world. It trades at a volume of $7.5 trillion per day. And that's almost 30 times that of the stock market. And when you trade Forex with a CFD broker, like the ones we talk about, then you're speculating on this exchange rate. And examples of different currencies are the Euro USD, which is probably the most traded currency. Then you get more exotic currencies like the USD ZAR or dollar rand pair. And then you get other major pairs like the pound dollar, and then you also get the Japanese yen USD. So there are many. I can't even tell you how many currency pairs there are. Probably at least over 300 to trade.
Yep.
But yeah, it definitely is the biggest market or financial market in the world.
Yeah, exactly. And stock CFDs are based on the stock prices of publicly traded companies. It's got nothing to do with currencies. When you trade a stock CFD, you're speculating on a particular company's price movement. So these are companies, big traded ones like Apple or Microsoft or Tesla, these kind of things. So in other words, instead of buying the actual stock when you're trading a stock CFD, you're placing a buy or a sell order on the trading platform. And if you place a buy order and the price of Apple goes up, for instance, you're going to make money. But if it drops, you're going to lose money. So that way, they're similar to Forex trading in that it's speculation rather than actually ownership. But otherwise, they're very different.
Yeah. So I'd say those are the basics. And for many beginner traders, there might not be a huge difference between, or it might not seem like a huge difference between Forex trading or stock trading CFDs. But the reality is that they are very different assets once you look a little deeper. And the one that you decide to trade on will be influenced mainly by your individual trading goals, your market preferences, and also your risk tolerance.
Mm-hmm. Absolutely. So let's have a look at these differences between the two. The first one to look at is market hours, and this is a big one. I think probably most people know this. Forex markets operate 24 hours a day, 5 days a week. So this offers much more flexibility for traders. It means that it doesn't matter where you are in the world, you're going to be able to trade the Forex market. And this continuous operation also allows traders to respond to global economic events as they happen, which is particularly beneficial for people with other commitments in their life as well.
Yeah, exactly. And stock exchanges are only available at certain times during the week. So you get the New York Stock Exchange, and it's open from 9 a.m. to 4 p.m. Eastern Time or New York time. And then you get the London Stock Exchange, which is open from 8 a.m. to 4:30 p.m. London time or GMT. So it's far easier to find time to trade Forex than stock CFDs, of course.
Yeah, exactly. If you're living on the other side of the world from the London or the New York Stock Exchanges, you're going to have a hard time trading. Yeah. The other main difference is liquidity. As you just mentioned, the Forex market is the largest financial market in the world. but it's also the most liquid financial market. And what does this mean exactly? Liquidity is how easily you can turn an asset into cash, or how easily it can be traded. If an asset can be bought or sold really quickly without its price changing much, it's considered to have very high liquidity. And so Forex market is incredibly liquid. And this also means lower transaction costs and much tighter spreads. This means much lower costs for traders.
Yeah, and this also means that large trades can be executed with very little impact on market price. And because the Forex market is so huge, it's easy to buy and sell assets, as you were saying. But the liquidity of the stock market is much more variable, which means that spreads may be wider on certain stocks. And you're also going to experience slippage more often, which means changes in price before you've actually hit that trade button, or as you hit it, the price changes quite rapidly. So you're not always going to get the price that you're looking for.
Yep, it's true. Another key difference is in fundamental analysis. So what moves the Forex market and the stock market? And what are the fundamental factors at play here between the two? Forex markets experience really high levels of volatility. And this is often driven by economic reports, geopolitical events such as wars or crises, and central banking decisions. And so as a result, Forex trading is really macroeconomic in nature.
Yeah, whereas the volatility in stocks is often influenced by company-specific news, financial statements, earnings report, the size of the company's floats, or how many shares are available. And it's also dependent on changes in market sentiment, whether people believe in a company or a certain stock. So stock CFD trading is definitely more focused on company performance and more on sector specific trends, which is quite different from the influence on the Forex market, of course.
Yeah, it's true. Another difference is in technical analysis. How do the two assets differ in terms of how you go about performing technical analysis? For both assets, you're going to use a price chart and you're going to analyze candlesticks and use indicators to predict future price movements. But where the difference comes in is the volatility of the Forex market versus the stock market. Because the Forex market is so much more volatile, traders are often going to trade in much shorter time frames. This mainly is our intraday time frames. So like daily, 4-hourly, 15 minutes, or even less if you're a scalper. This volatility also means that there are much more frequent trading opportunities throughout the trading day.
Yeah, and the stock market is generally less volatile because there are far few fundamental factors. Although I sort of mentioned quite a few fundamental factors at play, their announcements are not as frequent. So you would likely analyze and trade stocks on much longer time frames, such as the weekly or monthly time frames. So in other words, you might look at, swing trading or positional trading if you're going to be trading stocks, unless an announcement is coming up in the near future. Then you might look at, either you're holding your position or, trading on a shorter time frame.
Mm-hmm. Exactly. Another big difference is the leverage available. So both Forex and stock CFDs offer leverage, meaning you can control a large position with a relatively small amount of capital. However, the level of leverage available differs significantly between the two, with Forex CFDs usually having much higher leverage ratios compared to stocks.
Yeah, and also the amount of leverage you'll be able to use or access depends on your broker, and of course the regulation. So highly regulated brokers will offer traders in jurisdictions like the UK, Australia, leverage of up to 30-1 on major Forex pairs, but only 2-1 on stock CFDs. Of course, if you go with an offshore broker, such as one regulated by the FSA of Seychelles, then you might be able to access leverage of up to 1,000-1 on Forex and 20-1 on stocks. But as we say, probably every week, please manage your risk very carefully if you are going to trade with leverage, because although it can magnify your profits, it can seriously magnify your losses. And if you don't have negative balance protection, you can get yourself into a very sticky situation.
Exactly. And be aware that by trading with offshore brokers, you're often losing your negative balance protection as well. That's something to be aware of.
Yeah.
Another difference is that the stock market is much more susceptible to market manipulation. And this is a really interesting one. You hear a lot of rumors in the stock market, a lot. So like certain, a fund like BlackRock or somebody they're going to be selling this stock or they're going to be buying a certain stock. And it's really susceptible, the stock market, to this large fund buying and selling. But with currency trading, because it's such a huge market, the likelihood of any fund or bank controlling a particular currency is really, really small. There's enough money, it's sufficiently liquid in the Forex market that manipulation by a single entity is pretty much impossible, especially during the active trading hours for the major currencies.
I mean, we did speak about a couple of weeks ago about the trader in South Africa who manipulated the rand dollar price. But I mean, that's also something.
That's an exotic currency. It was an exotic currency and it was on Boxing Day.
Exactly.
And I think it was in the middle of the night on Boxing Day. I think it was an Asian session.
Yes.
And he specifically waited for low liquidity in order to be able to manipulate it. Yeah. But like if you're talking like the middle of the crossover between the New York and the London session, trying to manipulate the Euro USD, I mean, good luck. I hope you've got a casual 700 trillion lying up your sleeve,
Yeah, exactly. And then in terms of simplicity, so compared to stocks, which require understanding individual companies, individual industries, various market sectors, Forex trading basically revolves around a few major currencies. So it means that it's easier to concentrate your research and analysis on a few pairs as opposed to keeping tracks of the huge number of stocks available in the market and exactly what's happening in those companies. And also Forex trading could be, as you mentioned earlier, Chris, could be simpler for traders because it's more focused on the macroeconomic and geopolitical factors. And it's not difficult to find that information. That information is also readily available.
Yeah, exactly. Rather than having to dig down through, company briefings, and trying to figure out exact profit and loss and all that kind of stuff. It can be easier. Another big difference is for diversification and hedging. Forex trading allows traders to diversify their trades. This because currencies are correlated generally with such assets such as gold and the US dollar, for instance, oil and the Canadian dollar. And traders can hedge their currency risk using these assets. But those who trade stocks are not going to be able to hedge their investments, certainly not frequently anyway. But so, you can think about, if you are a heavy stock trader, you can think about using Forex trading as a way to spread your risk across different types of market.
Yeah, and lastly, the costs and fees can vary between Forex and stock CFD trading. So Forex CFDs have different types of spreads and overnight holding costs or swap fees compared to stock CFDs. And again, another major factor, because of the liquidity of the Forex market, the spreads on Forex pairs are often much lower than those on some stocks just because they're more heavily traded and the brokers can obviously make, enough money off the high volume of trading, more so than they can make off stock CFDs.
Yeah, and traditionally in stock CFD trading, there was commission involved. I know this is happening less and less. You're seeing more and more commission-free brokers, but it is something to be aware of that would still, I think, quite frequently, you're going to be paying commission on stocks. So in summary, when you're deciding between trading Forex or stock CFDs, you want to look at market availability. So basically, where are you located and what trading hours can you trade? If you can't trade during when the major stock exchanges are open, then maybe have a think about Forex trading. It's also important to understand that Forex is much more liquid than the stock market, which means that trading costs are going to be lower, and it means that your times of trading are much more, you've got much more opportunity. You also got to be aware that the Forex market is much more volatile than the stock market. Again, this brings in more frequent trading opportunities, but it can lead to heightened risk. And there are differences between the strategies used in Forex trading and stock CFD trading. Traders are going to use, if you're a Forex trading, you're going to use shorter time frames generally. And if you're trading stocks, you're going to want to look at longer time frames.
Yeah, and then you want to look at differences in the leverage available on stocks and Forex. So traders can start Forex trading with much less capital margin than with stock trading. Then you want to be aware that the stock market is more susceptible to market manipulation. So because the Forex market is so big, it would be difficult for someone to take out a large enough position size to influence the price significantly. Then the Forex market is much easier to understand than the stock market. It's easier to hedge your positions with Forex trading. And lastly, you want to look at your trading fees and costs involved in Forex trading versus stock CFD trading.
Yeah, exactly. And be aware that Forex trading costs are probably going to be lower on average. Yeah, so I think that about wraps it up, Alison. I think it covers pretty much everything. It's a really interesting topic, actually, and I hope our listeners have found it interesting. And it's a good indicator for beginners who are thinking about whether they should get involved in stock trading or Forex trading.
Absolutely. Yeah. Well, I really enjoyed it. Thanks so much, Chris.
Thank you, Alison. Speak to you next week.
Okay, cheers.
Bye.